Hello and welcome to today's video. Last week was action-packed from FOMC meeting to rate cuts to China-USA deal all the way to many interesting earnings. Actually, last week had so many important earnings I have decided to focus in this video strictly to fintech and tech leaders that are shaping the future of AI revolution. So in today's video I will cover latest results and highlights from earnings calls from companies like Meta, Google, etc. And without further ado, let's start. Before we start, disclaimer, nothing here is a financial advice. I'm just one person with a microphone. Always do your own research. So, PayPal delivered strong earnings this quarter, showing growth across nearly every key area. Net revenue rose 8% year over year, net income surged 24%, and total payment volume climbed 8%. Importantly, transaction margins also improved by 7% over the same period. Free cash flow expanded 90%, and to round things out, the company announced the introduction of a dividend program. This means that investors will now be rewarded not only throughout continued share repurchases but also with a direct cash payout, further enhancing shareholders' returns. Beyond the numbers, PayPal made headlines by announcing a landmark deal with OpenAI. It has become the first digital wallet integrated into ChatGPT, positioning PayPal at the forefront of what many call agentic AI commerce. This move hints at PayPal's ambition to diversify its business and stay relevant as AI begins reshaping online transactions. And you might expect the stock has rallied sharply on the news, and at first it did, climbing close to $80 in pre-market trading, but as the day unfolded those gains evaporated and ultimately PayPal closed the week in red. Now on to Meta, it reported strong results with revenue increasing 26% year over year and income from operations advancing 18% year over year, reflecting continued momentum across its advertising and digital platforms. However, the bottom line told a different story. Net income declined by staggering 83%. The main driver was a one-time provision for income taxes, which alone amounted to nearly 19 billion. It was extraordinary expense, but it was a one-time expense. The stock price reacted negatively to the surprise, sliding roughly 10% in the aftermath of the announcement. And some earnings call highlights. So the company emphasized that it's building what is believed to be the industry-leading amount of compute capacity, at least by them. Management noted that while superintelligence could arrive sooner or later, they are preparing for the possibility that it comes earlier than expected. If it takes longer, the same compute resources will be used to enhance existing services. In the worst case scenario, this would only result in temporary losses and depreciation, which they see as a normal part of long-term growth. The new AI glasses have also shown strong momentum, selling out completely within the first 48 hours of the launch. This surge of demand suggests that production capacity will need to expand to meet future orders. And now on financial outlook, for the fourth quarter, revenue is projected to range between 56 to 59 billion. Full year expenses are expected to be between 116 and 118 billion. Management anticipating significant capital expenditures growth in 2026 compared to this year. Alphabet reported its first ever 100 billion quarter in revenue, marking a 16% year-over-year increase. The company achieved an operating margin of 31% and earnings per share of $2.87. Breaking it down, Google services accounted for 87 billion of total revenue, while Google Cloud contributed to 15 billion, highlighting strong performance across both core and growth segments. Now, when we look at price action, Google was strong performer last week following its earnings, finishing the week up 8%, closing at new all-time highs. Now on to some highlights from earnings call. Google Cloud backlog grew 46% quarter over quarter, reaching 155 billion, underscoring strong enterprise demand and long-term contract momentum. Waymo announced a series of major expansions. The autonomous driving unit will enter London next year and is actively working to launch services in Tokyo. In the US, it plans to expand to Dallas, Nashville, Denver, and Seattle, having already secured approval to operate fully autonomously at San Jose and San Francisco airports. Scaling efforts are also underway in the New York City. Capital expenditures in 2025 are projected to be between 91 to 93 billion, reflecting continued investment in data centers, AI infrastructure, and hardware growth. The company also mentioned a partnership with PayPal, aiming at helping merchants create agentic commerce experiences, integrating AI-driven tools to streamline and personalize online shopping. Now on to Microsoft. It reported strong results with both revenue and earnings per share increasing compared to the last year. The main focus of quarter was the updated partnership between Microsoft and OpenAI. Under the new agreement, both companies will continue developing and expanding their AI innovations independently while still collaborating on shared infrastructure and product integration. Microsoft's stake in OpenAI is now valued at around 135 billion, representing roughly 27% ownership, which highlights the strategic and financial importance on this relationship for Microsoft's long-term AI ambitions. Price actions show the signs of exhaustion. By formation, we could say double top on the weekly. Some highlights from earnings call is that Microsoft Cloud revenue reached 49.1 billion, growing 26% year over year and 25% in constant currency, exceeding expectations. Commercial backlog rose by more than 50%, reaching nearly 400 billion with an average duration of 2 years. OpenAI has contracted an additional 250 billion in Azure services. Microsoft retains revenue share in the deal, exclusive IP rights and API exclusivity for Azure until AGI or 2030, with model and product IP rights extended throughout 2032. The company is building Azure AI Foundry, enabling customers to create custom AI applications and agents, already serving 80,000 clients, including 80% of Fortune 500. There are now 900 million monthly active users engaging with Microsoft AI features across products. Microsoft Cloud gross margin stood at 68%, slightly above expectations, but lower year over year due to higher AI investments, partly offset by operational efficiencies. To the outlook, Microsoft expects revenue between 79.5 billion to 80.6 billion, representing 14 to 16% growth. Operating expenses are expected to be between 17.3 and 70.4 billion, which would represent growth of 7 to 8%. And total spending will increase sequentially, and fiscal year 2026 growth is expected to outpace fiscal year 2025. And lastly, on Amazon, the company reported quarterly sales of 180 billion, marking a 12% increase year over year. Operating income reached 70.4 billion, while net income came in 21.2 billion. Over the past 12 months, operating cash flow rose to 130.7 billion, whereas free cash flow declined to 40.8 billion, primarily due to higher capital expenditures. Some other notable announcements were that company began offering Zoox robotaxi in Las Vegas and plans to offer that service in Washington DC, which would be 8th testing location. It announced plans to add hundreds of thousands of seasonal jobs, including 250,000 in United States, 150k in India, and thousands others across Australia, Canada, France, etc. And for the outlook, net sales are projected to range between 206 to 213 billion, reflecting growth of 10 to 13% compared to the fourth quarter of 2024. Operating income is expected to be between 21 and 26 billion compared to 21.2 billion in the same quarter of 2024. So the price action was strong for the week, as you can see. And now to some earnings call highlights. So the backlog reached 200 billion by the end of Q3, not including several new deals from October that together exceed the total deal volume of Q3. AWS momentum is accelerating as more customers move their core and AI workloads to AWS due to its functionality, security, and operational reliability. AWS power capacity is now double what it was in 2022 and is projected to double again by 2027. Amazon Bedrock is being developed into the largest inference engine in the world, and in the long run, it could become a business as large as EC2. The majority of Bedrock token usage already runs on Trainium, Amazon in-house AI chip. Cash capex reached 34.2 billion in Q3, bringing total spending to 90 billion year to date, primarily driven by AWS infrastructure and custom silicon investments. Full year capex for 2025 is expected to be around 125 billion, with additional increases projected in 2026. The current industry bottleneck, if you ask the Amazon management, would lie in power capacity, although it may shift to chips in the future. Despite that, Amazon continues to monetize new capacity quickly. And there is a strong customer interest in Trainium 3, coming from both large enterprises and mid-sized clients. And now to some conclusions. Strong earnings across major tech names show AI adoption is in the full swing. Microsoft and Amazon continue to dominate AI infrastructure, while Alphabet and Meta expand compute capacity to stay competitive. PayPal AI integration with ChatGPT positions positions it early in agentic commerce. High capex across the board is expected in 2025, with even more increases expected in 2026. And one question that I had on my mind is that how will smaller players handle this, as some companies stated it could take some time to see return on investment capital, and while leaders like Meta, Microsoft, Google have their core businesses to fall back on, the same can't be said for a lot of other smaller businesses that are also stepping in AI sector. And this is it for today's video. If you want my full breakdown article, feel free to subscribe to my Substack. Also, to check my daily insights and market updates, feel free to subscribe to my X account, and for educational content, check my website. Links for everything will be in the description of the video. So this is it. Hope you like it. Like and subscribe as a sign of support, and see you in the next video. Bye.